Earnings season is on in full earnest now, with TCS kicking off proceedings yesterday, reporting numbers after market hours. Reema is here to break the numbers down for us. Reema, morning.
Hi, good morning. So let's start with TCS, where the numbers are largely in line with expectations. There's nothing spectacular, no big beat, but operationally, numbers have met expectations. In fact, on the top line, the company has beaten expectations with a constant currency revenue growth of about 0.8%, ahead of expectations of about 0.5% growth. The company's margins came in at 25.2%, unchanged on a sequential basis, in line with expectation. The bottom line, though, was a miss. Profits declined by 12%, but that was on account of an exceptional loss of about 3,400 crore rupees. Majority of that came in on account of the new labour code, which hit the bottom line by 2,100 crore. There was a provision for a legal claim, 1,000 crore, and on account of restructuring. But the question is, the labour code impact was retrospective, done for the past period leave encashment gratuity. Going forward, the company says the impact is going to be very limited, just about 10 to 15 basis points. Now, on AI, they said the AI revenues are now approximately 6% of their revenues, $1.8 billion, growing very fast. But, as I said, right, nothing spectacular in the numbers. Nomura says the revenue in Q4 is contingent on that BSNL order coming through. As of now, there is no word on that. They expect FY26 revenues to decline by 0.7% and go up by 2.3% in FY27. Now, when it comes to HCLTech, it's actually a pretty good beat. Ahead of expectations, the company's raised the guidance, top line growth 4.2%, adjusted margins at 18.6%. We're talking adjusted because here the impact of the labour code has been taken at the margin level. The company says on account of the new labour code, there was a one-time impact of 956 crore at the EBIT line and 719 crore at the bottom line. FY26 guidance has also been raised. Overall guidance now stands at 4 to 4.5%, but the services guidance has actually seen an upgrade even at the upper end. The guidance lift was on the back of a strong execution in Q3 and the deal wins that they have enjoyed in the past. And this quarter was about $3 billion. AI revenues for the company now account for 3.8% of the overall revenues.
Reema, thank you for summarizing both TCS and HCLTech for us. Both of them will be the key determinants to how the Nifty moves in early trading today. Listening to now what the management of HCLTech had to say on their FY26 guidance in their post-earnings call.
We are raising our full-year services guidance to 4.75 to 5.25% in constant currency, and the overall company-level guidance to 4 to 4.5% in constant currency. We remain on track to deliver our full-year EBIT margin guidance of 17 to 18%.